Hey, what's up everyone? This is a quick video recap of these trades we took on SPY today, and I just kind of want to walk through the thought process behind them and kind of the overall mindset and why we entered these trades where we did. So to start off, if you watch my last video, you kind of know why these previous day high and low levels are my main areas I watch for bounces and breaks, and today was no different. Not only did they help us sell this first trade right on time, but they also got us into this nice break and retest of that level later on in the day. So if you like to play supply and demand zones over support and resistance levels, that's no big deal. All you have to do is create a couple zones for yourself to play off. I like to do that on the 15-minute chart. I'll go from the low of day wick to the following body, something like this. And that just kind of gives you a little bit wider of an area to play off if kind of the levels aren't your thing and you'd rather play a zone. See, you can play these bounces or you can play the breaks or the retests. It's the same concept. Today, I only had the levels on. I was watching the high and the low of yesterday, and I was watching the overnight sessions high and low. Those are my main two areas I was watching. So now, this is today. We're on the 2-minute time frame. Right here before open, there's two things I'm watching. I see the 200 EMA is right above, and we got this strong demand zone right below. So two things can happen here is what I'm thinking. We open, we sell off into the demand zone and we bounce, or we rally up to the 200 EMA and reject. Those are the two options I'm looking at. So as we open and we start to rally towards the 200 EMA, right about here, this is where I alert that I'm watching puts off the 200 EMA. Then, as we get up here and this candle closes showing a little bit of resistance, this is where I entered this trade. As always, the stop loss is going to be one candle close above the EMA. Don't let it get way up here, candle closing, the thing's going, shooting up, and you're wondering if you should stop out. The answer is yes. If you're expecting it to reject this 200 EMA and it doesn't, then that's an instant stop out. That just means the plan didn't work, and that's fine. Just make sure you respect the stop. So I entered here. It wicked above it a little bit. This is kind of your one area where it's feeling a little risky. You're getting a little scared as it's wicking up, but you don't want to stop out right here just to have it wick down and then run without you. That's the worst possible scenario. Before the candle closes, you just kind of have to relax and trust that the 200 EMA is going to hold because that was your plan. So as you can see, it wicks down. It creates this nice candle and then it sells off a little. At this point, you're in good shape. You know everything's working out. The first area I'm watching is this EMA cluster right here of the 13 and 48. This is the first area you want to watch for resistance. At this point, you're already up 20 or 30%. You don't want it bouncing off this right back to the 200 EMA and you giving back all your gains. Trail your stop right here or sell. It's up to you. I like to just trail my stop. But don't let it get here and you haven't moved your stop yet and then it bounces back and then the trade goes red on you when you were up 20 or 30%. That's kind of just what you want to avoid. As it breaks through the EMAs, the next level you're watching is this strong support zone. Once it gets here, you want to trail your stop real tight. We were up around 75-80% at this point. And this candle right here, this big green candle, that's typically what you see when you go into a strong support zone. They step in quick and your gains go away fast if you don't have your stop set, especially 20 minutes off open. So things are moving quick here. You want to just take your profit when you see it. So this right here was our first play. It was a simple 200 EMA rejection and we rode it down to the support. This is the same concept as like a supply and demand trade where you're just trading the edges. just on a little mini scale. You're buying up here in supply and you're selling down here in the band. Same concept. The next trade we took on SPY wasn't until this strong support zone broke. We didn't know it was going to happen or not today, but we were sure hoping for it. And when it did, we were ready to buy the retest. At this point, you're watching it here. It rejects the 200. It's coming down. These retests here were super nice. Had it not been for this strong support zone right here, I would have really wanted to take these. But since this was right here, I decided I've waited all day. I might as well wait 20 more minutes and follow the plan of it breaking. So when it did break, I was a little bit antsy to jump in. But I think for a good reason, because when a strong level breaks, sometimes it only retests for a few minutes before it sees that nice strong move out. And I was watching this kind of flag pullback here, and I really wanted it to get to here for my entry, but I decided to enter right here just so I didn't risk this candle right here and I missed the whole trade because I wanted a little better entry at the 13. So this is where I took those 366 puts. The candle broke. Sorry, this little flag broke. Right around here, they were up around 15%. And then they pulled back to, I think they even went red a couple percent. Instead of averaging down right here or buying more, increasing to my full position, I just bought the 365 puts. I do this sometimes because it'll make it easier to scale out. If you do want to just sell some, I can just sell a whole position of a different strike, and it's kind of like the same deal as scaling out, you know? So that's kind of my thought process behind that. So I entered here a little early. I was really confident this level was going to hold. That's the main reason I didn't wait for the full EMA touch. It was just because the level was so strong, I figured it would hold. So when it did pull back, this is why I entered that different strike, just to buy more. And then, as you can see, I guess we weren't the only ones waiting for that level retest, because we got a nice, strong 2 candles here. This is where raising your stop really comes in handy. Limit selling at 20% right here to have it go 50% in about 30 more seconds, it really hurts. This is where I kind of developed the whole process of just raising my stop and letting the winners ride, especially on fast moves like this. It'll really help if you can just ride this out to 50% with your whole position. And that doesn't mean be reckless. I'm just talking you can trail your stop instead of limit selling. So we got this. It hardly even bounced, and we got one more candle. These 366 that I bought here went 100%. These 365s went 140% in 4 minutes. Like, you don't have to hold all day trailing your stop. That went 140% in less than 5 minutes. So that worked out perfect. I didn't even get to scale anything. I was just like, whoa, that happened quick. Perfect. Raise my stop. It goes one more. I raise it again. Stopped out here on this candle. And that's how quick that trade was. We waited all day for this little 10-minute area, and it worked out perfect. I'm glad we waited and didn't get too chopped up in the meantime. But anyway, guys, those were basically our 2 trades. I guess you couldn't call it 3. One more thing to note. If you entered here and then got stopped out here, that's something you might want to work on, because the whole thesis behind this trade is a break and retest of this level. So unless it breaks above this level, you're still in really good shape. Just because it went up 15% and then pulled back to even, that's still not a very good reason to sell I mean, I get the whole being safe point, but at this point, you kind of want to see the trade through. You're already in it. It's doing exactly what you wanted it to do. Like, there is no reason for this candle to stop you out. This area where the 13 meets the level, that is like, this is the ultimate right here. This is what I'm always looking for. So to stop out right here, not a good idea in my book. Just something to note. I mean, I get trying to be safe and raising your stop really tight, but there comes a point where you have to kind of see the trade through. And at this point, everything was working perfectly. And this was exactly the kind of move we were looking for. A little faster, in my opinion, than I was looking for, but no complaints on that, right? But anyway, that's just kind of my thought process behind these two trades we took. One was a simple 200 EMA rejection, selling back into the support zone. And the next one was that classic previous day low break and retest that we've seen so many times. I don't know how many times I've took this trade. Hundreds. It works out a lot. That's a good setup, guys. But anyway, let's try and find two more like this tomorrow, yeah? Okay, have a good day.